Hi, Ian Rogers from Entreflow again with our final lesson in our series on tough cash management decisions for growing companies. We're coming to the end of the course, so please subscribe if you haven't already. This is the fourth and final lesson, but there's one more video after this one, and I'm holding back one pro tip in the end, so make sure and watch that. We've already talked about planning cash, about getting more cash, and reducing expenses. In this video, I want to talk about timing. One company we worked for had a huge accounts receivable problem. I don't want to tell you the name, so let's just call them Acme Corp. 70% of Acme's revenue came from one customer, and that customer started asking for longer payment terms. Accounts receivable grew from about $500,000 to about $2 million in a short period of time. The monthly sales from this customer was about $1 million, and Acme was receiving only $700,000 cash. It was a bad situation since, Acme relied on that revenue as their biggest customer. Eventually they negotiated and they were able to recover from this, but the point is that there's a downside to payment terms and there's also an upside. So here's some tips on timing of payments in and payments out. Tip number one, you are not a bank for your customers. Set reasonable payment terms. Getting paid in, say, net 30 or less is reasonable in most industries. You can and should go back to customers who have longer payment terms and negotiate. You should be firm on collections and charge penalties, especially if you're struggling with cash flow. Tip number two is to do the reverse with your suppliers. Go to them and ask them for longer payment terms. If you've got a long-standing relationship with a supplier that you've been working with well and paying on time, it's reasonable to ask them for a favor at this point to extend payment terms a little bit. That'll help with your cash timing. Tip number three is another flavor on that, but it's to negotiate with financial institutions. So in the early stages of business, your bank might hold on to checks for several days between when you deposit it and when the funds are actually available in your account. And similarly, a payroll processor might hold funds for several days before they deposit it into your employee's account. You might have a merchant service for processing your credit cards and such, and they might insist on a delay before they deposit those funds into your bank. Again, these are often things that are set up front with an unknown business, and if you've been working with these institutions for a while, you can and should go back to them to negotiate better terms. They won't come to you to offer it, so go ask. If you do these things right, you'll have cash coming into your bank sooner, which certainly helps. Please contact us if you want some help with defining and negotiating payment terms with suppliers and customers and financial institutions. And don't forget to check out the conclusion to this course with one last tip.